Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Hey everyone, and welcome back to this channel. I'm excited to go through this week's weekly market summary with you. Let's get started. The US market experienced significant sell-off this past week due to a combination of factors, namely tariff uncertainty. President Trump's tariffs have created uncertainty among retail and consumers, leading to concerns about potential price hikes and their impacts on the economy. Consumer sentiment. The University of Michigan Index of Consumer Sentiment dropped to 64.7, indicating a soaring outlook among consumers. Economic data. Reports showed that US business activity is nearing a stall, and existing home sales numbers were lower than expected. Lastly, corporate earnings. Disappointing earning reports from major companies like Walmart and United Health added to the market unease. These factors combined to create a pessimistic outlook, leading to a broad sell-off in the market. What does this mean for the market, you might ask? Well, please stick around as we break down this market's performance, analyze key trends, and explore how these economic indicators could impact major asset classes. As always, don't forget to like, subscribe, and hit the bell button to stay ahead with the latest market insights. Before we commence the market performance summary, I thought it important for us to take a deep dive into three key markets to evaluate the presence or lack thereof of a trend, which can either be bullish or bearish, using three financial instruments, namely the VOO, which is the US large cap stocks, the QQQ, and the ASI, which is the Nigeria All Share Index. We'll evaluate the health of the markets and establish an unbiased hypothesis of the state of this market. Let's get started. Let's commence our analysis by looking at the VOO ETF on the daily time frame. And what I have here is the price action that has been trading within this parallel channel. And we have two moving averages here. We have the blue curve, which is the 20 SMA, and the red curve, which is the 50 SMA. Beneath that, we also have the directional movement index, the plus DMI, which is the blue curve, and the minus DMI, which is the red curve. The white curve is the ADX. And lastly, we have the relative strength index. Now, you can clearly see on the chart that I have trend indicators and I also have an oscillator. The RSI is to infer future direction of price action, whereas the trend following indicators such as the moving averages and the ADX are to show me the strength of the market. Now, looking at this chart, I've gone ahead to perform an analysis and I will just walk through the findings together. So if I bring out my findings here and I move it closer for us to analyze it together, the first thing I want you to see is looking at the price action. You can see that the last candle, which was on Friday, is a bearish engulfing candle. You see how it looks very heavy. If we turn on the volume, let's see what is also happening with the volume, just to have another pre. We can also see that the close price is below the 20 SMA, and there is little separation, you can see, between the 20 SMA and the 50 SMA within the past few weeks. You can see they have been trading very close to each other. Recently, the 20 SMA went above the 50 SMA, but prior to that, you can see the 50 SMA was above the 20 SMA, which is bearish. And now the close price is on top of the 50 SMA. Remember, if the close price goes below the 50 SMA, then we say the market is bearish. Now, if we look at the RSI is at 46, which is below 50, which implies that the selling pressure is more than the buying pressure, and this predicts price decline. Lastly, from the ADX, we can see that the minus DMI is above the plus DMI, which is bearish. However, the good thing is that the ADX is less than 25. It's currently around 9, which also shows that there is no trend. So clearly, we can see that in the VO asset, there is no trend. Remember, as they say, the trend is your friend, so embrace it. Currently, on the VOO asset, there is no trend, and so there is no trend to ride right here. The next asset I would like us to look at is the QQQ. And similarly, I've also mapped out the channel in which the price action has been trading, the last few weeks. Clearly, again, we can say that the close price is below the 20 SMA. You can see this horrible bearish candle. You can also see that there's little separation between the 20 SMA and the 50 SMA. Also, the RSI is below 50, also indicating that the selling pressure is more than the buying pressure, which predicts future price decline. Lastly, from the directional movement index, we can see that the minus DMI is above the plus DMI, which is in good, which is bearish. However, the ADX is less than 25. So this is telling you that although there's a bearish signal here, we don't yet have a bearish trend, which is positive. Lastly, we're going to look at the ASI, which stands for the Nigeria All Share Index. And clearly, again, I want you to see the difference between a market that is trending and a market that is weak. The Nigeria All Share Index, the close price is above the 20 SMA. You can clearly see visible separation between the 20 SMA and the 50 SMA. The RSI is greater than 50. In fact, it's about 71, which is telling you that this market is currently overbought, and probability tells us that there might be a little pullback or pullback in price. Also, plus DMI is above minus DMI, which is bullish, and the ADX is above 25, which is showing you that there's a strong trend. And based on what I said, the trend is your friend. You want to ride this trend until you see weakness in the market. So right now, this is the market you need to be in. The Nigeria market is bullish in the short term, and we see how this market is going to proceed going forward. That brings me to the end of today's micro class. Thank you. Let's commence our market performance summary with the US large cap stocks, VOO, which recorded a week-to-date change of negative 1.79%. Year-to-date, VOO has delivered plus 2.66% compared to its overall performance last year of 24.98. The short-term bias on the daily time frame exhibits a neutral trend, while the mid-term outlook on the weekly chart is neutral. Moving on to the Nasdaq, represented by the ETF QQQ, this week saw a change of negative 2.53%, bringing its year-to-date performance to 3.11%. The daily time frame presents a neutral bias in the short term, while the weekly chart indicates a neutral bias in the mid-term. US small cap stocks, measured by the performance of VTWO, this week posted a decline of negative 3.66%. Year-to-date, VTWO has delivered a return of negative 1.48%. In the short term, the daily time frame shows a neutral to bearish bias, and the mid-term outlook on the weekly chart is neutral. Canadian equities, tracked by the ETF VCN, printed a weekly change of negative 1.39%. Year-to-date, VCN has delivered a return of 1.61%. The short-term trend on the daily time frame is neutral, while the mid-term outlook on the weekly chart indicates a bullish bias. The Nigerian market, tracked by the All Share Index ASI, the week-to-date change was 0.26%. Year-to-date, ASI has delivered a return of positive 5.41%. The short-term outlook on the daily chart points to a bullish trend, and the mid-term outlook on the weekly chart indicates a bullish trend. The oil commodity, tracked by the ETF USO, recorded a weekly decline of negative 1.80%. Year-to-date, oil prices have returned negative 2.05%. The short-term outlook on the daily chart points to a neutral to bearish bias, while the mid-term outlook on the weekly chart is neutral. Finally, Bitcoin, tracked by GBTC, declined by negative 1.74% this week. Year-to-date, Bitcoin prices have returned a return of negative 2.78%. The short-term outlook on the daily time frame is neutral, while the mid-term outlook on the weekly chart exhibits a bullish trend. What are my closing thoughts? Overall, the market showed a mixed picture this past week. US large caps and the Nasdaq remain in neutral territory, while the small cap and oil are facing some short-term pressure. Canada's market is showing strength in the mid-term, and Nigeria stands out with bullish momentum both in the short and mid-term. Bitcoin, on the hand, continues to build strength for a potential move higher. As always, staying adaptable and focusing on trends that align with your strategy is key. Thanks for watching. Don't forget to like and subscribe, and I'll see you in the next one. Thanks for tuning in. Until then, trade wisely and stay informed.